over the last 90 days. We've had a little bit of a drop in the last 30 days with the 67% probability, but we're inside of the 20 handle of a 69% probability. What we are watching for here as we are going into our morning timeframes was that 20 handle to potentially lead us into the direction of the gap fill. As you can see here, that 20 handle has traded and defended here throughout Asia, Europe, and then our pre-market timeframes. And then the question of where it goes from there is kind of answered here by the leading indicators. Now, the dollar currently doesn't have an effect on the indices right now. We're in a neutral to slightly negative correlation with the ES and NQ. We're in a neutral to slightly positive correlation with the YM and the Russell. But the relationships that we do have are with bank potentially falling back down into a pullback. Now, that would create intraday weakness, and that is really correlating with us falling from the 20 handle into the gap fill. If bank keeps falling, we're going to fall back down to these larger support levels. That would continue to create a headwind for the indices. And then there's the VIX. And this is such an important moment here in our markets. Last week we had an announcement that Kevin Warsh was going to be the next nominee for the Federal Reserve chair. And there's a lot of questions about what his policies are. The markets, the narrative surrounding Kevin Warsh was that he was a hawk. And it's surprising that we're getting into an environment where the Trump administration was very critical of Powell for being too higher for longer, and yet the markets are essentially saying that Warsh is a more hawkish version of even Powell. The Fed Watch Tool, though, and let's refresh this here, is right around a 45.9% probability. And if we look at the historical average here for the June range, 325 to 50, you can see here that we're coming off of a high. So the rate cut is actually getting less probable as we're getting into this week. So the question is what is it really, outside of narratives? Does the market believe Kevin Warsh is a hawk or a dove? And that's what we're going to answer here today. In terms of price, the VIX has defended this. It's stick saved, essentially. It's been front run by 3, the old contract lows to new contract highs. And our question as we were going into the close was, if this level had defended, it would lead the indices into gap fills below. And then will the VIX just squeeze right back up to the top of this range? Or will there actually be something in the middle of it to get in the way and continue the VIX weakness trade? Or will the VIX just squeeze up into its larger profit targets? Well, when we've previously watched these stick saves in prior examples all throughout history, and I think this is a really important moment as well too when we think about the history of the Federal Reserve, is that the VIX started becoming a great leading indicator for the broad markets on February 5th of 2018, which was Powell's first day. Do market participants, maybe not necessarily bearish on the stock market, but understanding that there's the potential for uncertainty leading forward to the next days, weeks, and months as we go into the nomination, as markets become more clear what Kevin Warsh's policies are, do they bid the VIX up? If the answer is yes, we actually are in the setup that would produce that. And there's a lot that we still have to answer here about this week's trend. But at the moment, all that we can conclude is that the VIX is so far. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.